Hello everyone, this side CA Ankit Bajaj. In previous lecture, we have discussed about performance ratios and I have covered three ratios, right? So I have discussed about return on asset, I have discussed return on equity and return on capital employed. What is return on asset? That what return you are able to generate from your total assets, right? So I have shown you the financial statement of Tata Limited. You have seen the balance sheet of Tata Limited and we have seen some data, right? So what is going to be the formal return on asset? Formula is going to be operating profit divided by total asset. After that, discussed about return on equity, right? So what is the formula for return on equity? Form is profit after tax divided by equity outstanding, right? This is going to equity shareholder fund you can take, right? Then we have discussed about return on capital employed. What is the meaning of capital? Capital employed means shareholder funds and long-term funds, right? Usually you can say that our total capital you have invested into the business. So here capital means loan and share capital both, right? So what is going to be the formula? Formula is going to be operating profit divided by capital employed. These three things what we have done, we have discussed, right? Now if I talk about Tata, so Tata is a manufacturing company, right? Now if I talk about other companies, if I talk about other sectors, right? If I talk about FMCG sector also manufactures fast moving goods, right? But if I talk about technology sector, so what technology sector do? They provide services, right? They don't do manufacturing, they provide services. So if I talk about Tata Motors, so Tata Motors require huge assets, big assets, right? Like building land, like machineries, big machineries, equipments, furniture, etc., right? They even require lots of working capital. Why I'm saying lots of working capital? Because they need raw material, right? If they manufacture car or if they want to manufacture trucks, so they need lots of raw material, right? So they need lots of. But if I talk about technology-based companies, so they don't require raw material, right? Why they don't raw material? Because they are providing services. Right? If I talk about myself, so I don't require any raw material, right? Or I provide training on different modules. So if I'm providing you services, so I don't require any raw material, right? So in case of Tata Motors, they require lots of machineries, lots of equipment, lots of raw material, lots of working capital. But in case of technology-based companies, they don't require lots of assets, right? They don't require lots of working capital, right? So here you will find lots of differences, right? So we will be learning those differences in detail and how you can analyze the financial statement of technology company, how if you are analyzing the financial statement of oil company, so how it will be different from technology sector, right? So we will be taking multiple cases. So now I will be continuing the case of Tata Motors, right? So we have discussed issues. Now if I talk about next ratios, right? So next ratio, you can see asset turnover ratio. Here if you see asset turnover ratio. Now what is the meaning of asset turnover ratio? So what I will be doing, first I will bring down the formula here. If you see here, so if I write down the formula, so what is going to be the formula here? Formula is going to be turnover divided by total assets, right? This is going to be the formula. Turnover means sales. Now what this formula talks about, right? This formula says that what kind of much turnover you are able to achieve from given assets, right? So in my example, we have seen a company has invested how much money into assets. Company has invested 100 crores into assets, right? Here you can see company has invested 100 crore rupees into assets, right? Total assets. Now, if the total asset value is how much? Total asset value is 100 crore. Now, let's suppose what he is doing, company is able to achieve sales of turnover of 500 crores, right? So what is going to be asset turnover ratio? Here, asset turnover ratio is going to be, that is sales or turnover divided by total asset, right? So here what is going to be the ratio? Ratio is going to be 500 crore divided by 100 crore. So it's going to be 5 times. Right? That is going to be is it 5 times. This is what asset turnover ratio. Now we will check that what kind of turnover they are able to achieve. If I talk about Tata Motors, right? So here you can see what is the asset turnover ratio of Tata Motors for the year 2021. It is 0.74. It shows that if Tata Motors, they are having asset rupees 100 crore, so they are able to generate turnover of rupees 74 crore. They are able to generate turnover of rupees 74 crore. Similarly, if you here, so here asset turnover ratio for previous year is 0.71, right? See the subsequent previous year detail. So in 19, the asset turnover ratio is 1.15. So it is 0.99. Here it is 0.85, 0.89, and they are able to achieve approximately, you can say their asset turnover ratio is 1 or 0.90 or 0.80 sometimes, right? So this is what asset turnover talks about, right? So they have invested 100 crores, so they are able to achieve turnover of rupee 4 crore. Now, if I talk about assets, so it may include building. So they have acquired land, buildings, of other asset, right? So their total cost is 100 crore, right? Equipments, furniture, etc., etc. Now, if I talk about inventory turnover ratio, now we have discussed asset turnover ratio. Now, what is inventory turnover ratio? So inventory turnover ratio means turnover divided by inventory, right? Turnover divided by inventory. This is the formula. If you read this particular line, so what you are able to understand? Definitely, you might be that how company is utilizing the inventory, right? You might be thinking that now we are talking about inventory. So here formula says that how efficiently you are utilizing the inventory, right? What is the meaning of inventory? Inventory means basically material, right? Inventory, as per accounting standard 2, the definition of inventory is inventory includes raw material, right? It includes finished goods, it includes work in progress also, right? So if I take example of Britannia, right? So what is going to be the inventory of Britannia? First, I will taking the example of raw material. So Britannia, basically they are into manufacturing of snacks, right? So what is going to be raw material of Britannia? So raw material of Britannia is going to be like milk, sugar, right? Wheat, flour, etc., etc. This is going to be the raw material for Britannia, right, etc. Now, further, if I talk about what is going to be the finished goods, once they will be manufacturing the biscuits, right? Once they complete the manufacturing of biscuits, they have packed the biscuit. That is going to be the finished goods. What is going to be the DP? Let's suppose they have started the process of manufacturing of biscuits. Huh? So let's suppose they have added sugar, they added milk, they have added wheat, but still some ingredients are remaining. So this is going to be work in progress, right? Now, let's suppose if I talk about Britannia or if I talk about Tata Motors, what is going to be the raw material or inventory of Tata Motor? Obviously, steel, glass, so plastic. This is going to be the raw material of Tata Motors, right? Now, it is not possible for Tata Motors to completely utilize those raw material in a year, right? So there could be chances that they have started manufacturing the car, but that car is not completed at the end of the year. So that non-completed car is going to be treated as a work in progress. So if I talk about inventory turnover ratio, so here what is going to be the formula? Formula is going to be turnover by inventory, right? Now let's suppose in total, Tata Motors, they are having inventory, which includes raw material, finished goods, and WIP, right? Let's suppose in total, in year between 2021, I will take, right? 2021, they were having inventory of 500 crore, right? But out of this inventory, I'm again repeating, this inventory includes raw material, finished goods, and WIP, right? So you don't have to consider only finished goods, right? You have to include all the components when you are calculating inventory turnover ratio. Right? So let's suppose the inventory, the total inventory of Tata Motor is 5 crore, but they are able to perform, let's suppose, sale of 200 crore rupees, right? So going to be the inventory turnover ratio of Tata Motors here. So the inventory turnover ratio is going to be, I will again write down the formula for your understanding. It is going to be sales or turnover divided total inventory. Right? So here you will find sales is 200 crore and is 500 crore. Right? 200 divided by 500 if I do, so that will be 2 divided by 5. Right? So it will be 0.33. I don't know the exact. So I will take here 250 crore. And I calculate it right now. So I will take here 250 crore. So that is going to be 0.5 times, right? It means company having inventory or stock of 500 crore rupees, but they are able to perform sales of only 250 crore rupees. That inventory ratio or turnover ratio is half of total inventory, right? So here you can see they are having great inventory turnover ratio, right? Better over Tata Motors. So the ratio turnover ratio is half of total inventory, right? So here you can see they are having great inventory turnover ratio, right? Better over Tata Motors. So they are having inventory turnover over ratio of 11:2, right? 10.34 in previous year. It shows that they are having great sales. They are having high sales, right? They are having 13.4, 10.46, 9.19. So every year you can see their inventory turnover ratio is increasing, right? Every year you can see So it means if they are having inventory of 100 crore rupees, they are able to perform sales of 1100 crore rupees in this ratio, right? Then if I talk about debtor turnover ratio, what is the meaning of debtor turnover ratio? Now here we have to discuss about debtors, right? Now basically, it talks about credit sales. It talks about credit sales. Who are going to be debtors? They are selling goods on credit. That is, persons is going to be debtors, right? So basically, it talks about credit sales. Then let's suppose company is performing sales 100 crore rupees. Out of 100 crore rupees, what is the proportion of credit sales? Right? The proportion of credit sales, and what is the proportion of cash sales, right? So let's suppose 100 crore is the total sale, right? 100 crore is the total sale. Out of 100 crore, let's suppose company is able to sell goods on credit, that is 70 crore, and here company is able to sell goods on cash, that is crore, right? Now, if you see what is going to be the formula of debtor turnover ratio, so formula is going to be turnover divided by debtor. Right? This is going to be the formula. Now, in this case, if I ask that what is going to be the debtor turnover ratio, right? So the person whom we have performed credit sale, it is 70 crore, right? The person to whom we have performed credit sale, there is 70 crore, right? Our outstanding debtors are 70 crore, right? So if you see what is the turnover, turnover is 100 crore and debtors are of rupees 70 crore. So here 1.33 times, right? Here, if you see what is the debtor turnover ratio, debtor ratio is 23.14. Right? Debtor turnover ratio is how much? 23.14. It shows that company sells their goods mostly on cash. Like if I talk about Tata Motors or if I talk about automobile company, when you will be buying a car, so what you will be doing, you will be buying the car on EMIs. Right? You will be the car on EMIs, right? So mostly what you are doing initially, whenever you are buying from any car showroom, so immediately what you do, you make the payment. Right here, you don't have to think that if you buy car on installments, so these Tata Motors or Maruti, they are giving you credit. No, the bank will be doing. The bank will be giving money to the Tata Motors, and now what you have to make the payments to bank, right? So here, Tata Motors or Maruti, they are not giving you credit. Who is giving you credit? Bank is giving you credit. So that is the reason. If you see here, so their turnover ratio, debtor turnover ratio is 23.14. It means, let's suppose their total turnover is 100 crore. Out of total turnover, they are performing credit sales of only 5 crore, or you can say only 4 crore, right? Out of 100 crore sales, their credit sales is of rupees 4 crore. Now, if I calculate debtor turnover ratio for this given case, so debtor turnover ratio to be 100 crore is the turnover divided by 4 crore is the credit sales or debtors. So here you will find the debtor turnover ratio is how much? It is 25 times, right? So you can see here, they are mostly performing their sales into cash. Right? So this is about debtor turnover ratio. Now, if I discuss next concept, that is sales upon fixed asset, right? So what is sales upon fixed asset? So here we have discussed about asset turnover ratio. We have discussed about asset turnover ratio. So here what we were doing, we were taking total assets here, right? What we were doing, we have taken total assets here. Just a moment. Yeah. We have taken total assets. I have written here total assets. Right? What is the meaning of asset? Total asset includes both. Here I will write down. Total assets include fixed asset and current assets. Right? It includes both fixed assets and current assets. Now, if you see the new ratio here, so new ratio talks about sales upon fixed assets. Here now we are not taking current assets, right? When we are calculating these ratios, so what we are doing, we are ignoring current asset. We will be including only fixed assets. So if you see the sales upon fixed asset ratio, so what ratio we are getting? It is 0.88. Here 0.9, right? So now you're comparing your fixed asset with sales, right? So company has acquired land, company has acquired build, company is having equipment, furniture. So with the help of those equipments, how much turnover company is able to achieve, right? If I talk about working capital upon sales, right? If you see your working capital upon sales. So working capital, basically now what they are doing, they are taking working capital. What is the meaning of working capital? Means funds which are required for day-to-day running of business, right? So working capital ka formula hai current asset minus current liability. Right? This is the formula, right? So working capital divided by sales, right? So what company is doing here? 4.52. Now why we are getting here negative, right? Because we have seen in balance sheet, right, that current liability is more than total of current assets, right? Here, if you see the balance sheet, So you will understand, right? Here we have seen that the current liability of company is more than current asset, right? This is the current liability, that is 6,251 crore, and the current asset is 14,276 crore, right? If you find a difference, so here there is a difference of 11,975 crore, right? Here is a difference 11,975 crore. So here the working capital of company is negative. Going to be the formula of working capital. Formula is going to be current assets minus current liability, right? And what value we are getting? 11,975 crore, right? So now what they are doing, they are taking sales from, right? So I will show you the sales of company. We will be discussing about yeah. So here you can see the sales. So the sales of company is how much? 40,031 crore rupees. Sales of company is 47,000. We can take 40,000 only. So we will see what value we are getting here. So it is 11,975 divided by 47,000. I do here. So it is minus 0.254792, right? So you can take in percentage also, right? Otherwise you can take like this also. So if you see the we are getting here negative value. We are getting here negative value, right? So this is how they have calculated working capital divided by sales, right? This is how you will be calculating. They might have taken in percentage, right? So this is a working capital upon sales. Now, why you will be calculating working capital upon sales, right? Because you know your sales is very much linked into working capital. Why it is very much linked with working capital? Because see, here we have seen the current asset minus current liability. What current liability includes? It includes creditors. If you have short-term loans, right? If you have created some provisions, those things are included in current liability. If I talk about current assets, asset include debtors. If you have given some loans and advances, so debtors and creditors, they are the import of sales. Why I'm saying they are the important part of sales? You will be buying the raw material on credit, so automatically credit will be recorded in your books. Then you will be selling goods on credit, so automatically debtors will be recorded, right? So that is the reason we calculate working capital in sales, and we try to compare that how is our working capital supporting to our sales, right? That is the reason we calculate this ratio, right? So we will be discussing a few more ratios in next lecture. Thank you.